Good morning, everybody. Get started here in just a couple of minutes. Good morning, good morning. Hope you guys can hear me okay. Let me check here. What do we want to do? Oh, this here. This here, and then this. Good morning, everybody. Thanks for being here. Monday morning. It's really the last sort of real week for from a news flow perspective, at least from scheduled news. This side of the calendar, so we want to make the most of that and get started here in just a sec. Again, if you guys can hear me okay, just let us know quickly. But it sounds like we're good, so sounds like we're good. All right. All right, let's get started. Just get the mic ready here. Perfect. All right. Again, good morning, everybody, and happy Monday. It's December 16th. I'm Serge Berger here from The Steady Trader. Welcome back. As I just mentioned before, this is really the last sort of official week in terms of official news for the year. There's obviously always unscheduled news, but after, I'm just looking at my calendar over here on the other computer, once we're past Wednesday, where we get the Fed meeting, a decision, it's going to start tapering off. Now, again, that does not mean that there's no news. In fact, we could get a crazy ton of news, but at least in terms of news that are scheduled. So with that, I want to do two things here today. We'll keep it as short as possible. But first of all, from a swing trading perspective, what I want to do is I want to be extremely selective here when it comes to adding new stuff before the Fed. In fact, this morning, whether you are an ETF Silo Pro member or an Inner Circle member, or certainly clients over at Blue Marlin, we're actually making a bunch of changes. We're removing a bunch of hard assets ETFs this morning. That's just because they haven't been acting so well. But I want to actually do two main things here. First of all, let me show you two trades I've done this morning with the TST Trender. One of them still happening live in the futures. And of course, this can be done with SPY and stuff as well, but just my choices tends to be futures for this kind of stuff. So this is a live chart, as you guys can probably see. It's ticking live of the S&P 500 micro futures contract. You can see that we have two green arrows and one red arrow. So I took those two green arrow trades, meaning those are two buy signals. So if you're using the TST Trender, again, not everyone day trades. That's not the point. I'm not trying to force anyone to day trade. Obviously, that's silly. You do your own thing. This is educational. But I'm trying to show you that momentum is a strategy that works. At least if I use the TST Trender, there's obviously lots of different strategies out there that I can't speak for. So you can see we got a buy signal there at that time. This is very early this morning. And we had a nice move, took some profits. And then we ended up getting a sell signal, but that sell signal was not valid because we needed to break below a range, and it didn't break below a range there. So basically, in very simple terms, you can see when we got that sell signal, the stock or the futures contract didn't actually break down. In fact, about, let's see, 5, 10, 15, 20 minutes later, we actually got a buy signal. We received a buy signal, and you can see since then, the S&P futures are up 0.189%. I mean, the market's hardly moving, right? So it's like watching molasses, but still, it worked, right? And so again, I can only encourage people as we gear up towards 2025 to get yourself familiar with momentum. It's something that works very much so on the swing trading side. Obviously, it works on the day trading side, but I think momentum is going to be a big thing next year. And momentum does not mean buying, Nvidia when it pulls back 10%. That's not a momentum trade. That's I'm going to hope it goes back up after it pulls back, trade. That's worked for 15 years, and I don't think that's going to work as well next year. We're going to get a lot more momentum and a ton of opportunity. And so I just want to show you that. Okay. Now, any questions, let me know, but I want to go to the next thing. So if you use the trender, go check out some of these trades. Now, I need to follow up and continue on the chart that we talked about now for a week and a half because it's tracking perfectly so far. This is the, let me share it with you here. This is the seasonality chart. I want to give you an update on it. It's actually quite uncanny the way it's setting up right now. So again, this is the S&P 500 seasonality chart. And when I say seasonality, it's October through the end of the year. So again, the white line, in case you're new and you haven't heard this before, the white line is the 30-year average of price movement of the SPY ETF from October to the end of the year. And you can see the blue line or the purple line is how it's been tracking this year. So that's the SPY this year since October. And you may recall this if you were here last week or even the week before. I said that according to this, the S&P should be topping for a short pause of a couple of weeks on December 6th. If you go pull up a chart of the SPY, you will find that that's exactly what ended up happening. So the top here is exactly also where historically for the past 30 years we've topped. And I say topping, right? Not the market then crashes, but literally a consolidation period that has historically for the past 30 years on average, just an average number, right? Keep in mind, understand what that means. An average means some things are longer, some things are shorter. But on average, it's held until about December 20th. This is really micro, near term. Again, I'm not advocating this kind of approach too much, but it really is uncanny the way it's working so far. So this should last, according to history, until December 20th. After December 20th, the odds are, if 30-year history holds, that the S&P sees a year-end rally. Right? What happens after that, we'll see in the new year. That's a different story. Right now, we're focusing for the rest of the year. Okay? Now, here's where things get really interesting. So far, this is working out, but let's go back and understand two things. First of all, the Fed has a meeting, of course, on Wednesday, so we're going to get a reaction on Wednesday and Thursday to that, which, according to this, one would think would be sideways to lower for a little bit. Here's where things get really interesting. So again, this is the history. Now, from here where we are right now to the lows on December 20th, if it were to play out this year, the S&P has another 0.6% to drop. Okay, so keep this number in mind, 0.6%. Again, this is an average number. Don't take this for a guaranteed sure thing. That's absolutely not the case, but it's a good reference point. Okay, so 0.6% of more potential downside between now and December 20th. And I mean, I say downside, it's laughable. It's flat, right? But just keep that in mind. Now, let's bring up the chart of the SPY. And I'm going to use it here with the TST trender, which, by the way, remains in a momentum buy signal since the 6th of November. Now, watch this. If we take Friday's close right there and we subtract 0.6%, okay, guess where we get? We get right to the 21 period moving average. Okay, that's this purple line. So let me repeat that. So that's from here to here. That's almost exactly 0.6%. Right? And that's also what history suggests. If 30-year history average works out exactly as it does, and it shouldn't because it's just an average, right? But still, I thought this is really interesting. I thought I would bring it up to your attention. Some people care, some people don't care about this. I think it's interesting because, again, there still is, I think, when I talk to fund managers, I was snowboarding with one of my buddies who runs a fund on Saturday, and he too, and then this morning walked to the office, my other buddy who runs a fund, And they were both telling me that the pressure that they face to basically add a few more and chase a few more of the stocks that have been working all year, right? Including basically the S&P. So that's the why, that explains the seasonality. The seasonality doesn't work just because it works. It's not voodoo, and it only works in bull markets, or mostly in bull markets. Anyway, I hope you guys find this helpful. That's really honestly all I had this morning. Those two things, I think it's actually quite helpful, very helpful. And I would encourage you to make sure to take it a bit slow. Here, again, obviously this is not advice, but we are going to get the Fed meeting on Wednesday. And until then, I suspect things are going to be quite choppy, unless we get some leaking of the news. But we'll be back here tomorrow morning, and we will have more to say for sure. There's a couple of things that I'm watching as well. And again, if you're using Momentum, the TST Trender, I'd encourage you to do that. Now, we are holding a special session starting in 20 minutes on the using our process, using the market rover to find ideas, being able to scan a market using our tool called the market rover. I would like to show everyone how this works, how we want to use this going forward into 2020. We actually added something to the active watch list here this morning, so we're going to be discussing that as well. It starts in 15 minutes. If you don't have the link to that, please make sure you give Joel a call. It's 401-203-7389, or you can just email support@thesteadytrader.com, support@thesteadytrader.com, and he can give you the link to that webinar. It starts in actually just a little bit more than 15 minutes. So we're looking forward to seeing you guys there. With that, have a good start to the week, and we'll see you in 17 minutes or so. Take care.